Everyone, Steve Fernandez here with Market Insights. I'm going to talk to you today about different ways you can get exposure to cryptocurrency and some pros and cons that go along with each of those ways. And first, I just want to talk to you about the way that I think is the least effective, my least favorite way to get exposure to crypto, and that is by buying these investment trusts that trade on the over-the-counter markets. You may have heard of Grayscale. They're a crypto investment company. They have a series of trusts where they go out and they buy the actual crypto. So they have GBTC, for example, which is a Bitcoin trust, or ETHE, which is an Ethereum trust. Grayscale goes out and they buy these cryptos, hold them in a trust account, and then they issue shares that you and I can go in the market and buy. Now, keep in mind, these are not listed shares that trade over the counter. And there's some risk that goes along with investing or buying these trusts, if you will. First and foremost, you cannot redeem your trust share for the underlying crypto in the trust. So this actually can create a problem where the value of the trust share either goes well above what is actually worth in terms of the crypto in the trust, or well below. So if you look at this chart, this is the premium and discount, which basically means what I just described. The premium would be the price of GBTC, the trust, in relation to how much Bitcoin is in the trust. So you can see in 2015, 2016, all the way really until 2020, this traded at a premium. So instead of buying Bitcoin at the spot price or whatever Bitcoin was worth, you're buying a trust share for a premium to Bitcoin. So you can see this got as high as 100% premium back in 2017. And this was because retail investors were probably just learning about Bitcoin and they were scrambling to buy it, buy exposure to Bitcoin in their retirement accounts and their brokerage accounts. And that's problematic. Would you want to pay double the price of something that's really only worth, half of what you paid for it? I wouldn't personally, when there's other options out there. And I'll go over that here in a little bit. Next, I want to show you the same concept, but with another popular Grayscale trust. This is ETHE. And I really shake my head at these. This got up to 900% premium to its value back in 2020. That is absurd. Basically, as Ethereum goes up, you can still lose money in this. As you can see, the premium ended up becoming a discount in 2022. So now, there's a couple ways to look at these now. I just described some problems with it, but now these are both trading at discounts. So you could take a risk by buying these and say, okay, maybe one day the SEC will in fact allow these to be converted into ETFs. And if that is the case, then you and I can convert our shares into the underlying crypto, which in that case would pretty much eliminate that premium or discount that I described. But that is a risk. There's no guarantee that the SEC ever allows these to be converted into ETFs. And quite frankly, that is not a risk I am willing to take as a trader or an investor. Another investment vehicle you could potentially buy to get exposure to crypto is an ETF. Keep in mind, there are no spot ETFs, so no ETFs that allow you just to invest in Bitcoin, but there is a Bitcoin futures ETF. I forgot to pull up the ticker in front of me, but just a little bit of background on the Bitcoin futures ETF. It's not pure exposure to Bitcoin. It's a future strategy. So that actually, in a sense, actually reduces the returns you can get in relation to Bitcoin, because generally it's going to have a negative roll yield. What I mean by that is when the price of the futures contract, so let's say you're buying a futures contract of Bitcoin in this fund, or the fund is, they have to sell that contract they have to sell the spot contract. And when they keep doing this, it creates a negative roll yield, right? Because you're paying more to get exposure to Bitcoin, and you're basically selling the futures contract that's about to expire. So as that cycle continues over time, it creates a lag on the return. So a negative roll yield makes that Bitcoin futures ETF attractive, and any crypto futures ETF that may arise unattractive from that angle. Next, I want to talk to you about another type of investment that you could potentially get exposure to crypto, and you can trade it in your brokerage or retirement account. And it's also one that I'm not too keen on, but I think it's a little bit better than buying, say, these trusts or ETFs. And these are crypto miners. So crypto miner stocks are, as they sound, they do crypto mining, or in some cases they might be crypto companies that invest in crypto or staking. Well, I'll just touch on crypto miners just to show you kind of the concept and why I would probably avoid them. So first of all, mining is very competitive. Generally, as more miners come on, it becomes harder to actually mine because there's more competition. And that generally leads to reduced profitability unless the price is going up dramatically. So in cases where the price is going sideways or down, that higher difficulty really can drag on profitability. And that's problematic because these companies are paying to mine. They can reduce their costs maybe by using solar energy, battery storage, etc. But they are still paying to mine. They have break-even prices. And as the price of the crypto goes down and the difficulty goes up, profitability can turn negative. And we actually have several stocks, Hut 8 Mining, Bitfarms. Hut 8 is their negative net income company. Bitfarms, they've been profitable recently, but that could very well change as the price of crypto goes down or as more miners come onto the network. Also, keep in mind with these miners, their past performance is not necessarily their past financial performance isn't necessarily what the reality is for this company. What I mean is, let's say they report 2021 revenue. When revenue is reported by a crypto miner, it's based on the fair market value of that crypto when they mine it. So if the crypto goes down, like it did between 2021 and 2022, that revenue that they reported in reality, when they go to sell it, it may not be worth what they reported on their previous financial statement. So in cases where the crypto goes down, it would mean that they basically reported higher revenue than what they're actually taking in when they sell it, which is problematic. So, and with that, you can see in this chart that generally, this is for Bitcoin miners, generally, you can see this blue line, the share of monthly Bitcoin production sold. Generally, crypto companies don't sell their production, when they actually mine it. You can see it hovers, 40, 20%. And in May, when Bitcoin's price was under stress, over 100%. So they basically sold everything that they produced that month. And if you get the idea of falling prices hurting returns or hurting profitability, you would know, that's the worst time to sell Bitcoin or any crypto. You should be selling it when it's high or near its highs. So that business model is slightly problematic, and these companies have debt. So it just adds risk as the price of crypto, which is very volatile, changes over time. So you avoid some of the risk of investing in these trusts, but you're taking a big risk on the company themselves and in the competition that exists in crypto mining. The last one is the obvious one. You can buy cryptos on an actual exchange. Think Coinbase, Binance, and there's less factors at play when you actually buy crypto directly from an exchange. Obviously, you're not taking those company-specific risks, mining companies, or you're not dealing with a premium or discount, a dislocation from the value of the actual token. And you actually, in some cases, may get benefits for actually holding that token. Think staking yields. If you're staking at a reputable crypto exchange, for example, that can boost your returns when you actually hold the actual crypto. So keep that in mind. That's my preferred way of investing in crypto. If I'm going to consider investing in crypto, it would be spot crypto. So directly through an exchange. That's going to do it for today's video. I hope you learned something. If you disagree with anything I said, you have any comments, leave a comment, and thanks for watching.